Bonimir. I've had the honors to work on the implementation of skills education guarantees since the launch in 2020. So it was a great pleasure seeing how the first intermediaries ventured with us on this adventure. And I think it's the time now to stop a bit and look at the student lending and see what are the opportunities and challenges we have identified. And for that, I would like to invite the first panelists already on the stage. Rosen from Komerční banka, Carmencita, Nader from the Erste Bank Austria, Stefan Buciuc from the CEO from BCR Social Finance, and as well as Ando Siitam, who promised to be on stage and provide a bit of an overview of the student lending and what have they discovered in the meantime.
Thanks, Romana. As said, a big chunk of advisory work what we're doing is also upstream. So we really try to understand the market needs and demand. And in the context of skills education, we commissioned 2 studies last year. One study was really to understand and map the latest situation of student lending across the EU. We also tried to analyze it or compare it with the reference markets in the US and UK. And the second study we conducted was actually to find new financial intermediaries, unknown to EIF at this stage, actually, who could help to reach out us to the new students, basically, across the EU. So it was 2 separate studies where we tried to understand what's going on, what are the main financial products offered for students as of 2023, and also looking what could be done more in terms of student, let's say, in guarantees, lending side, but also from equity side. So during this session, I would just maybe want to focus on the student lending, because that's the title of the session. I will just give you a quick overview, snapshot of the main findings, main takeaways from this study. The study is actually quite long, so I don't have time here. So I will focus only on loans and guarantees, and I will leave out actually quite a big work stream, but we had running in parallel was actually looking into the regulatory requirements and the tax implications for alternative funding schemes, what was discussed just previously. So, as I said, the study was really to conduct the mapping and to understand what's really going on. So the latest refresh of our understanding. So we had, as I said, we had the 2 work streams. One work stream was really looking into the student financing products. We also tried to understand and collect data. What are the main costs? Let's say. Terms and conditions and cost attached to the revolving repayable financing, and we also tried to get as much as data about them and the defaults and the risk drivers. But obviously, that was probably the most challenging part of this analysis, because when we reached out to the commercial banks and commercial, let's say, financial intermediaries, it was quite difficult actually to capture the data. So what did we find out? So basically, as you can see, there's quite a lot of financial products already offered across the EU. Some member states offer more, some member states obviously less, but more or less, all the member states are covered. Also, in majority of member states, we have several types of financial products available, and in terms of loans. I would say even that majority of member states have 4 or more financial intermediaries or intermediaries that can offer some sort of a student lending. So as I said, we also not only focused on commercial banks, financial institutions, but also we looked outside the non-financial institutions like foundations, non-governmental institutions, universities, whoever is offering typical usual student loans, but also we looked into what is the situation in terms of deferred payments and income share agreements. And probably there is no big surprise that ESAs themselves are really in a nascent situation, and it's only very few countries managing and implementing those type of schemes. And interestingly, we also noticed that there are 15 public guarantee schemes, and in those countries the conditions of student lending is mostly better than where the pure commercial banks are offering loans without any public backing. So bear with me now. Next two slides are actually quite tight or quite small text. I tried to. I was told that let's keep a few slides, so I put more text in the slide. Even though I don't like slides with a lot of text. But bear with me. So what we found out. So obviously the loans are the most preferred option to finance students. And out of 25 member states, we actually found 18 who actually provide loans, only loans. And why 25? You can question, but last time we had 27 member states indeed. So we found out actually 2 member states don't offer student loans at all. So for various reasons, I'm also discussed and briefly mentioned during the last panel that there are regulatory requirements, know your clients and creditworthiness requirements that basically hinder them to offer loans for students, but also probably because of the public policy approach, how they finance their higher education, mainly, supported by governments, by paying, for the studies from the government side. What we also found out that, probably there's not a big surprise here, that the amounts available for students really differ from country to country, and there's no real correlation. Why they are different between countries. One could argue that the more expensive countries, or let's say more developed countries, but generally the life is more expensive, is higher amounts, but actually it's not really true. So we have seen that let's say if we have to really pinpoint the average amount of loans available for students, it's probably somewhere around, let's say, 46,000-45,000 euros in total. But that being said, some countries it can be very low because the studies themselves are free of charge, and then the lending itself is just covering the living cost or transportation. But also, the loans can be very high. So we have seen, the member states or schemes where the loans can be up to 100,000, 120,000 in total. And there's also one particular case where actually the loan can be up to 250,000, if I'm not wrong. But this is linked to when actually the students go and study abroad, especially, if they go to study in the US, for instance. In terms of interest rates, again, depends very much whether it's offered on a purely commercial basis, or there is some sort of public guarantee backing, whether it's a government-backed guarantee or EIF provided guarantee. But in general, it's probably around 4%, and in many instances also the interest rate is fixed. But there are also, again, cases where actually this is linked to the Euribor and basically floating interest rate. Low maturity, again, very much depends on the scheme setup. Quite often it is linked to the multiple of study period, but also can be more simplified approach, basically just saying whether it's up to 10 to 15 years, but in some cases also it can be actually 25 years, which I think was in Finland. In terms of collateral requirements, third-party guarantees, we see that if the student lending is offered by commercial banks, most of times there are collateral requirements, obviously, and in case of public guarantees, there are no guarantee requirements except a few countries. I'm Estonian, so I'm very surprised that we are the top one here because it's publicly guaranteed loan, but still we require third-party guarantees. Yeah. If we move on to the guarantee schemes, as I said, there are 15 public guarantee schemes on top of the EIF provided guarantees. And most of the cases, the guarantees are provided by state agency or the ministries by themselves. And then the only few cases, 1/3 actually, are provided by national promotional banks or institutions. Very similar approach here in terms of maximum loans. They're quite often linked to the full tuition fees. It can be also in terms of conditions. It can be either total or linked to the yearly maximum amounts. No big surprises. In terms of guarantee rates, I think it's a bit. That's I think most interesting part in terms of guarantees, that the guarantee rates are very high. It's actually in most of the cases the guarantee rates are 90 to 100%. So actually, public guarantee is taking the full risk. By themselves, and only in few member states, the guarantee can be as low as 70% or 80%. So obviously there is some needs, especially when the commercial banks cannot take the collaterals guarantees. Then definitely they require or need more higher guarantee rates. Guarantee periods, again, 6 to 15 years. And as I said, quite often linked to the multiple of study periods, but also could be simplified approaches here as well, depending on a bit of a maturity of the countries and the schemes and institutions involved. Yeah, and obviously together, with the public support, the public guarantees, there are normally some requirements. So either what's the maximum interest rate the banks can charge, what are the let's say other requirements to the students. But mostly the interest rates are capped in case of guarantee schemes are involved. So main takeaways or main key findings related to student lending part of this study, was basically that we see that there are plenty of options already available, and student lending is probably the most preferred option across the EU member states. Mostly the studies themselves are still financed by public support, in terms of scholarships or grants, but the loans as a repayable support is the most preferred option. In terms of alternative schemes, ISAs and deferred payments are there, but in very few member states, and there's definitely more to be done. So in terms of legal and regulatory constraints, we see that further harmonization, if possible, would likely benefit to get more out of these schemes. And even though there are guaranteed student loans, we feel and we see that this is still not enough. I think there's still things to be could be fine-tuned, and I think that's also one of the findings what we feed back to the policymakers as well. That in future iterations of the student lending schemes, we should also look more what could be done to promote and actually make the funding available for those students who cannot rely on their parents or get funding from, let's say, public funding in terms of grants. So that's it. Hopefully, yeah. And I will join the panel.
Thank you, Ando. Please. So as we heard, that commercial players play a major role so far providing student lending in the industry. So for that purpose, we have key players also and experts in student lending on the stage. If I could ask to spare a few words and introduce yourselves. Maybe Stefan, you would like to start.
Sure. Hello everybody, my name is Stefan Buciuc. I'm the CEO of BCR Social Finance. I'm also heading an innovation unit in BCR, the bank. And also I'm the president of the Romanian Microfinancing Association. Nice to be here.
Thank you. Great to have you. Carmencita?
Hi, my name is Carmencita Nader. I'm actually a colleague. of Stefan. We are both in the Erste Group universe. I'm in Erste Bank Austria. I'm heading the social banking department there, focusing on microfinance, on education, on housing, basically social innovation, all the socioeconomic levers that can lead to a positive transformation of individuals and societies as a whole. And in addition, I'm management board member of the only real social bank in Austria, Zweite Sparkasse.
Thank you. And Jan, could we hear about you?
Hello, my name is Jan Rosen. I work for Komerční banka, which is a universal bank in the Czech Republic. So we have individuals, small businesses, corporates, investment banking and so on. And I do implement all EIF guarantees. We have culture sector, we have creative culture sector, we have microfinance, we have skills and education product, digitalization and so on. Nice to see.
Great to have you. And I guess everyone met Ando. Do you want to still spare a few words?
Maybe I like to think that I'm also a practitioner in this field. So I have taken student loan by myself when I was young. So I have successfully repaid. But also in my during my time at the EIB, I also tried to I helped the Maltese basically to set up the first time student guarantee scheme in Malta. So I'm actually hopefully have done my contribution to support the students across the Europe.
Thank you. So maybe let's dig then into the details, understanding a bit about your business, how you rolled out the student lending, if you rolled up successfully or not. Maybe Jan, you could spare a few words explaining how was the experience for you starting or not starting student financing.
Yes, it is an experience of not starting. As we heard from and we saw from the presentation in the Czech Republic, currently there is no loan called student loan. We of course that we finance students, but it is not like the student financing as we would like to imagine. So we and it is because of the regulatory requirements that there is a law that we should always verify the source of income, and if the students don't have income optionally, so that then we are allowed to consider their parents as the source of the income. So that's why we always ask parents to come to join the loan contract, mostly as a guarantor. But finally, it's so that it is much more administrative demand that we can directly finance the parent, and they use these funds for their child and to prepare them or use the funds for what students always need. So that's why there is no student loan currently, but we hoped that we may change it from the skills and education guarantee, but we didn't succeed it when we come to our colleagues that there is a EIF guarantee, and we used in the past these guarantees to start a new business that we had in startups. We didn't finance startups before. We came to our colleagues from this department. Look, there is a EIF guarantee for startups. Consider whether it should be somehow used to start this kind of financing. And in startup it worked in the past, but now they said we would like to, but we still would like to need the parent as a guarantor. So we said, why not? So we asked, we were in contact with you and your colleagues, and we discussed it before our application to involve also students' loans to be a part of our facility. But unfortunately, it was not possible to combine parents' guarantee together with EIF guarantee when the students is there. So that was the example and experience we had with.
Thank you. So I understand that you had quite some challenges, and so far the product is not available in Czech Republic. However, I think we have 2 more success stories where you successfully rolled out the products to finance students. Carmencita, could you perhaps explain a bit how the roll-up worked in Erste, and was it successful? Were there any limitations that you faced? And if you could provide a bit of a status update on financing students.
So for the real success story, I need to refer you to Stefan, but I need to correct in a way that we are currently finalizing the guarantee, and we will be rolling out presumably within the next weeks. But it has been an uphill battle to this point. I'm telling you, because a lot of the challenges that you're seeing in Czech Republic, we have also seen in Austria. There are two main things. One of them is obviously regulatory requirements. In Austria, you do see a range of student financing products. However, those are all more in the traditional consumer finance. It's not so much investment, it's more consumer finance, and there you have all the requirements, starting from a regular income, starting from a guarantor, or any other collateral that you might require, and that actually excludes exactly those students or learners that we would wish to target. So this is something that in Austria can be circumvented with the guarantee, which I'm very happy, and this is something we're going to pilot now. Looking traditionally into the mindset in Austria, very on point. There has been for a very long time been the mindset that learning takes place between 0 and 23. It starts with school and finishes, if you're lucky enough, with university, and it is mostly publicly financed. And this is something that will probably change now with lifelong learning, with the skills requirements that we have seen with the shortages in skills. And this is something we would wish to participate in and facilitate with the new product. And also finally with the need and the requirement to illustrate a regular income following the education program that also shows that you can repay the loan. Also for this, it is beneficial to look into the skill set, because here you can not only conservatively expect that there will be a sort of successful employment following the program, but there's also extensive data in Austria illustrating what the entry-level salaries are. And this is a very conservative estimation that we will be using now within our pilot. And now for the real success story.
For the good introduction, then I asked Stefan to present how the rollout worked in BCR Social Finance. If it all was successful, did you face any obstacles, any limits or regulations that were impeding the quick roll-up? If you could provide a few words about it.
Yeah, so success story, to have a success story, it needs time. So bear with me, and I will just, walk you through our success story, which I say is not yet a full success, but still developing. So we started in the pandemic times, in 2020, when we saw that professional reconversion was needed. And what we did is very custom innovation. So basically, we financed an NGO that basically financed students that were paying to a provider of training, reconversion training. And it was very useful at that point because, single mothers or people from Horeca could find not anymore a job, so they wanted basically to change. And it was a pilot of around 100 people, 40 were financed, and 5 were actually a default, and the rest were good payers till today. And it was a very innovative scheme at that point, and then we're looking, okay, how we can build the next level. And next level came with skill. We were actually in the pilot, and when we heard that we can have a guarantee, that was fantastic in our opinion, because we actually could expand our experience and make a better success of what we were trying to do. And actually the guarantee secured us the success, or secured us the first step of trying to build a success. Because we were trying to build this product in the bank like 7-8 years ago, and it was not a success because we were asking for a co-guarantor. So this is a lesson learned in time. And this is also a thing that actually changed a lot our vision on how to build the product. And then we went to University of Babeș-Bolyai, and we did, this is one of the biggest universities in Romania, and we did a survey with them. What actually are the needs of the students, right? Students and learners. And I'll read you some because I think I don't want to miss them, and I think they're really important and lesson learned that we took at that point. So what they need. Students would prefer not to burden family with their expenses, right? So this is the EIF guarantee coming in. Then this is also very important for vulnerable population, because students coming from low-income families do not have parents to guarantee for them. So actually having the EIF guarantee helped us, to expand our impact. Then they would like to have access to tuition, rent, living expenses. So this is how we designed the product, so that we could pay this type of costs. Then would like to draw in tranches. Very important, so basically we did our systems to be able to draw in tranches. Then the next one, would appreciate the grace period during studies and sometime after, right? So we studied, we looked in US, we looked in Europe, we had a long chat with KfW on their student loans, and then we understood how to build our product. Then they do not need large amounts. Yeah. So it's very interesting. I will tell you the numbers actually, because I don't have a PowerPoint. But actually, our normal loan, it's medium, it's 2,000 euros, right? So it's not 40, it's not 30, it's not 20, it's 2,000. And this is another discussion. We don't want to overburden or do over-indebting with our students, right? So we learned that. Then what is also important is to look in the local legislation. Regulatory, this is the only loan that has no debt to income ratio, right? You don't need to prove that you have an income to pay. So this is how we built our scoring machine in the back. So we looked at on how to go forward with our systems. And yeah, then on the product, I think it's also important to tell you how the product is designed at this point. So it's available for students and learners. And this is, I think, very important. It's not just students, it's also about the ones that want to do professional reconversion. And from our total portfolio, 20% are doing professional reconversion, so they have like some income from somewhere, and 80% are students. And then it was interesting because we needed to design the product in terms of maturities. So how much grace we give to Bologna system, to engineering system, to medicine or whatever, healthcare studies. Different periods, different graces, different monitoring to all these studies. Then during the grace period, they do pay interest. Why we did that? Because we don't want to give a loan and then talk again with the students in 4 years or in 6 years or whatever. They will surely forget about us. So it's also part of the financial education. So what we introduced in our discussions is modules of financial education. So they kind of need to graduate, like each semester, a module of financial education. And this is a very difficult task, I can tell you already. Then the eligible cost I already told you about. There's tuition, there's living expenses, there's rent, also equipment or whatever transport the student needs. Another very important part is the fixed pricing. So what we give, it's fixed pricing. And the pricing was a huge discussion with EIF, I can tell you about it. They said that we're too expensive. This is a discussion about funding costs and everything in the back. It's mathematics, and especially with what happened last year, with tripling the funding costs for whatever you need. That's a very difficult discussion you have, with the students. But the student is one. I'll tell you when you discuss with the mother of the student or with the father of the student that wants to get in, and GDPR-wise, you cannot let them in the discussion, so they need to sign a separate form so that you discuss with them also. Wow. So this is about how we design the product, how the product is. And I'll stop now and I'll tell you maybe the challenges later.
Yes, thank you for the overview, and I think some of the details were quite surprising, including all the counterparties involved. However, I was wondering, Carmencita, was it easier for you to set up the product, building on the experience of Stefan? Is there any synergies that you think cross-border could work in Europe, seeing success stories in certain jurisdictions and then transferring them to other countries as well?
So we definitely had the possibility to exchange with Stefan and with your team in the field before, and we definitely capitalized on that. However, what I do see in the region that we're operating in is that every market has very different requirements, and while I hope that we can set together with Stefan a precedent in how you can use the guarantee and how you can expand the program, which is something I very much wish to do and I very much hope will happen in the future, I think it will be a subject of discussion with local authorities on what is possible and what isn't, unfortunately.
Indeed. Ando, discussions with local authorities and regulation. In your survey, you identified certain issues. Are those cross-country, and there is something that the advisory could support as well in the discussions? Or this is something we could ask the policymakers to support us on at this stage already?
I think in general, one thing is really to pinpoint down. I mean, what are the obstacles or possibilities? I mean, normally we don't really engage with the let's say regulatory authorities. I mean, to help them to change something. But I think the whole report itself could be useful for both intermediaries, but also the local authorities to understand what is happening across the Europe and see whether as a good practices could change their own local laws and frameworks. Just drawing here examples of when we looked into them, how many member states really have their like a student lending specific regulations or laws, and there are few. There are not so many actually who have tapped into the opportunity to set something concretely for students. And I think once you just rely on pure consumer credit normal regulations, more than often you come to the point that you have to carry out those checks of creditworthiness and know your clients. And I think that's actually one of the root causes of why maybe we haven't seen so many let's say soft lending opportunities for students in more member states.
Jan, do you want to complement? Is it possible somehow to address these issues that Ando identified also from your side? Is there something we could do in changing and shaping the guarantee? I understand the main issue is asking for the collateral and third-party or parental guarantees. Would an NCAP guarantee maybe target these needs and address those? What are the main challenges for the commercial banks to offer the student lending?
I would say that the cap guarantee is exactly what is needed for the students' financing, because it is a large number of small tickets, and the default rate is. It was surprising, and maybe it is based on our experience that we always require the parents' guarantee that we would meet these caps. It's not a problem of capped or uncapped. Maybe if I may react on the research you just presented, there was in average interest rate 4%. And it was, I don't know, Stefan, how is it in your example? But when we provide our consumer financing, and we cannot fit it because our base rate of our national bank is 5+, and even Euribor is now 4%. Is the pure Euribor. So I don't know. Maybe it is some another source of how to cover partially the interest. So maybe that's it. But if I say what to do to support it, so I would say that the skills and education product that it is exactly cap guarantee for students. So it's exactly what is it needed in EIF experience. So I think that it was presented before the coffee break, that only 1/3 of funds are still available. I think that when I saw the discussion and networking, so I'm afraid that now it's less significantly. But I would encourage you to ask for this guarantee, because it is exactly what small tickets cap guarantee for free.
Thank you for the good advertisement of the guarantee product. And I think there's one challenge that it was identified to sort and discuss also the interest rates, how they can be tackled and combined with the guarantees. But at the same time, are there any other EU-wide challenges or synergies that you think could benefit having stronger EU-wide connections to facilitate the growth? Do you see student lending growing as such in the coming years? Because you started with narrower products, exploring a bit of education. Do you see it expanding and growing, or it's still something that's missing, or the appetite is missing in the industry? Maybe Carmencita, you want to?
I do slowly see the appetite growing, at least in the region that I'm operating in with my team. We currently, as a large bank, we're also bound to work together with our risk department. So the pilot is very restricted at the beginning. So we will be looking in two particular fields, broadly speaking, in the area of care and information technology coding. But as we will be working strongly with partners in educational institutions, we're already getting their needs presented for potential expansion of the product. And there we see that especially in the areas, and this is something that Julie said and that resonated strongly with me in the first panel, you especially see in adult learning and very skilled jobs such as construction, alternative energy, anything in that direction, you see a need for further support, and you see right now maybe a niche, but a growing niche, of people who might not be receiving sufficient subsidies or public support to cover for especially the educational lever that might lead them into a more prosperous financial future on their own. And this is where we come in as banks, and I really think that an educational product such as we're now able to set up with the guarantee is for me a hygiene factor. We're not going to get rid of that, and that's not the point, right? But it's a hygiene factor that there's something to bridge this gap. And this is basically in the sense that we will now be able to offer in Austria, not yet existent.
Thank you. And Stefan, would you like to share your views on growing the product and the offering? Currently, the demand is for smaller tickets, I understand. Is there appetite to grow it bigger? And to grow bigger, would you need a different type of product as well available to support also your student lending?
Yeah, firstly, I would have two comments on the cap guarantee before going to growing it. First one, we're in a very hot labor market now, right? Everybody's employing. Banks are trying to increase unemployment, right? Well, central banks, I mean. Right? So the inflation will go down. But if we, when we talk about NPLs, then we have the cycles. So now we have a hot labor market. When the labor market will be not so hot, the NPL will increase. Because when we look at it, it's basically on an employability index that you basically give your loans. You'll give less loans to, volleyball teachers than to maths, right? Let's put it like that. And we can go into scoring and whatever data we want to look at, right? So this is the first one. Secondly, and this might necessitate in time a higher cap rate, or maybe, I don't know, full guarantee. This is one. Secondly, and also for some regions maybe. The second point is on the cap rate. Right now we're looking at some types of industries when we finance, but then not everybody graduates in universities, so we have like a huge deficit in, I don't know, laborers in different fields. Like I can give you an example. On agriculture, the machine operator right now needs to be extra qualified. Did you ever see a tractor in the last year maybe? Did you got into a new tractor? How it looks like? It's a spaceship. I mean, you won't be able to drive it. So we need those people who will drive those machines. And it's not like the AI will drive everything in the next 3, 4, 5, 10 years. So that's another discussion. So on the cap rate, going to this type of labor, right, that we want to support, we should have a higher cap rate. This is on the developing the product. Otherwise, I think that we have a very good product now. We just need to expand it more, and we need more data. Right now, just to give you some data, because we don't have vintages, we don't have other stuff to discuss about. I don't know, we're still, with social, but we're still bankers here, right? So we need to look at some things. The data are like this. In Romania, 33% of the loans we gave are in the poorest area of Romania, in Moldova, which for me it's a very important index. We basically gave the opportunity to the kids from a very poor area to go to school. Then another important number. 54% are males, 46% are women. Again, gender, balanced. I don't know how your numbers look like around, but I think that's also a very important thing to look at. Then, on developing the product, some states, and we move to the challenges, you know, how we develop the product. Some states like Romania launched actually a study loan. The state launched a study loan with a co-guarantor, but with zero interest. How the IF product is mirroring that product, that's another discussion about how, you know, the Commission, the Parliament, and everybody else is also looking at how the national initiatives and European initiative align. And this, I think, it's a mission for the next Parliament and Commission. Because we are in election now, we don't have time for that, I'm sure. But I think it's a very important discussion we should have.
Indeed. I think it also resonates with Ando's findings that in certain countries where there's more state support, then also the market is less developed for borrowing. I think we're almost out of time. I would have one more question, but maybe I would give the opportunity for the people on the floor to raise their hands if they want to ask on rolling out student financing or any challenges faced or any recommendations in doing so in the meantime. Yes, please.
Hi, good afternoon. Alessandra Chirico Consulting. A question to each of you in few words. How would you position yourself and your business, your activity, in the ecosystem? In the ecosystem you operate. So meaning what kind of interaction you have primarily thinking not only of the end user, meaning the students. Is it more the industry? Is it more universities? So could you please clarify this point? Thanks.
So if I understand correctly, maybe I'm a little bit different from my colleagues. So we focus on SMEs and financing in SMEs to educate their employees. This is currently what we would like to do under the Skills for an Education product, that we will provide financing to normal SMEs in order to provide increased qualification of its employees. This is on few following years what I can see in this product.
Okay, I resonate with that because we also provide, you know, financial education and business education to small and medium enterprises and to micro especially. That's our purpose. To answer a question, we're a dystopy because we don't distribute dividends. So we just wrote in our bylaws that we don't distribute dividends. Everything we get as a profit is reinvested in our impact. So basically, we reroute part of the profit or most of the profit in order to have like break-even type of business towards impact. How we position in the ecosystem? Ecosystem is such an abused word, actually. I mean, you don't really know what it means in the end. But if we put society instead of ecosystem, I think we are an actor that cares about the community, cares about how it develops the civil society, and also cares about how we build education. With everybody that can be involved in this.
Fully support what you've been saying. We're impact bankers, so we have a strong impact component and we are striving to work cost covering. As for our activities in Austria, we strive to provide an offer that can be so successful that it can be extended to be a standard offer within the bank. For now, it's with social banking, and we directly will approach students, but not as Stefan, 80% university, 20% skills. We're going into the skilled labor and labor shortage area with a focus that will probably be 80-20 the other way around in the future. And we also seek to provide financial education via independent social enterprises, which will guide the potential applicants in the full field before they even approach us, to be sure that they fully understand the concept of the loan and they fully understand the meaning of engaging in that financial wedding with the bank for the next couple of years.
Thank you. You'd have one more question?
Rather kind of follow-up comment.
Okay. Could we?
Thank you. Perhaps I'll stand up, then you see me. Hello, I'm Mark Offert from DG Education and Culture at the European Commission. In reply to your question, I'd also like to give perhaps a bit broader overview of the feedback we have so far and the numbers. As you know, we were in this initiative since the beginning with transnational mobility in the field of higher education, because that's where we saw a market gap. And then building on that learning, we moved to broader schemes together with universities, with income share agreements and so on. So now we are in the market, so we see that, we have a broader reach. So I think that we succeeded in that respect in reaching a larger market niche somehow. Now in terms of the intermediaries or the beneficiaries, the students, we see that about 40% it's in the higher education, primarily in the master students, and 40% it's rather in upskilling, mainly in the area of bootcamps, digital skills, coding. So that's the two biggest areas, and then the 20% which is ranging broadly in between. Now another element perhaps that's quite interesting is that we see the satisfaction, the feedback that students give us is quite equally positive with, let's say, satisfaction rates over 70% throughout, indicating that the beneficiaries, the students, they really appreciate the, let's say, the opportunity they are getting, that they do acknowledge let's say, the market they're operating in. Of course, if they have good national support schemes, they will take advantage of that. But otherwise, they look for what is available. And whether it's in, let's say, a more type of commercial type of offer, or it's an income share agreement, that they will appreciate that opportunity and they will go for it in order to develop their life chances. And of course, the fact that it's without collateral is, of course, a key issue. So, thanks.
Thank you very much for your comment. Then, looking at the time and being mindful of the time, I would thank you all. Okay. Last
Sorry
question.
about that. Yeah, sure about that. Thanks so much for sharing all your ideas about financing these initiatives for students. I was wondering if you ever evaluated about the possibility for students to repay their loans through their own skills. So as a way to use skills as a way to pay back on their loans during their course of study, at least a part of the loan might be also repaid back in the form of skills. I think as a former student, I can also attest that you want to provide your skills back, you want to be able to use them, and I think it also helps to solve the issue. You can't get a job without experience, but you can't get experience without a job. So I'm wondering if you ever evaluated also using skills as a way to pay back to these loans as well, to some degree.
Maybe Stefan?
Yeah, let's put a new idea here, the barter interest. We should explore that. We do that through internships, right? So basically we pay some students and they do internships, and they can, cover the interest doing their university. But on the other hand, the money should go around. If it's just a barter economy, then it's a different story in a way. So you need to monetize a bit your skills.
Thank you. So we'll close the session now. Thank you for the panelists. A round of applause.
Thank you.